Yay for government regulations. Today we're talking about the pattern day trading rule, but more specifically, what actually is a day trade, what counts as a day trade, what doesn't count as a day trade. Let's quickly go over some broad background information here. Day trading rule, all this started in 2001. My guess would be that's when, internet, online brokerages really started to pop up. So the government decided to step in and implement the day trading rule, which states that you may have 3 day trades per 5-day rolling period. Now, rolling period, let's first just knock that out of the way. What does that mean? It means that you can't just do all your day trades on a Friday and then on Monday you have all 3 day trades again. That's what I remember way back when. I thought I'd kind of manipulate the system and try that, but no. Rolling period means that if you do 3 on Friday, well then you got to wait until Friday before you get those day trades back because it's a rolling period. So again, doing 3 day trades on a Friday does not mean that on Monday you all of a sudden get your 3 day trades back. So you're allowed 3 day trades within a 5-day rolling period. But that brings up the question now, okay, I get rolling period, I get how the 5 days works, but you get 3 day trades. What exactly is a day trade? What counts as a day trade? What is not a day trade? Now, a lot of people, okay, yeah, a day trade, you buy and sell within a single day, but there's a lot of scenarios out there that all of a sudden create kind of, so that's what we're going to talk about here, those different situations. So let's just first start with some basics in terms of what a day trader is, or what a day trade, I should say, is from the very top. Let's first just get a definition of day trade out of the way, and then we'll really kind of dig into define all these different parts of it. Any opening transaction closed out in part or in full in the same day is counted as a day trade. This includes option transactions. So a day trader as a whole, same day. That's the key word here. Everything's got to be going on in the same day. Now within this does include pre and post market trading. So for example, we'll go on Eastern time frame. You buy, well, let's assume first that your broker even lets you trade in before and after hours, but your broker does, and you buy some shares at 9 a.m. EST. This is still post-market or pre-market. You then sell at, we'll say, 4:30 p.m. EST. This again is post-market. That would still be a day trade, even though it didn't happen during the quote-unquote, normal trading hours of 9:30 a.m. to 4 p.m. Eastern time. That would still count as a day trade. So same day does include pre-market and post-market. Next part of the definition that I want to focus on, opening transaction. That just means initiating a trade, getting something started. I don't really like opening transaction. I think we can define this a little bit easier. So what we're going to refer to it as is, think about opening transaction as entering a trade. So I'll just put enter. You can look at it as initiating a trade, getting something started. Hey, I think this is going to happen. I want to get into the trade. I want to enter into a position. So that's what opening transaction is being defined as whenever you enter into a trade. Not to state the obvious or insult your intelligence, but exiting a trade is not the same as entering, right? So big focus here is when you are entering into a trade. Our first example here, I want to just remind you of a few things. Blue, remember, blue is representing entering the trade. In this case, we are buying. So, hey, I think that stock's going to go up. I think stock ABC is going up. I want to enter into the position. I want to buy. So you buy 500 shares of ABC. You sell 250 of ABC. You sell 250 of ABC. What do we care about? Going back to the definition, we care about the entry. That's what everything is based around. So you entered once, yes, and then you did have 2 trades down here. But were these entry or exit trades? Well, they were selling, therefore they were exiting trades. So that doesn't matter because everything is based on the opening transaction or when you are entering into the trade. So because you entered in once, this would be 1 day trade. Sure, you got out on a couple different orders, but entry, 1 time, therefore it would be 1 day trade. Our next example, we're still going to be working with 500 shares, but a little bit different. So let's go through it. You buy, so you enter in 250 shares. You then decide, I want more shares, so you got to enter in more. So you do another buy. You enter in again for 250 shares. So you have one entry order, then you have another entry order, and then you sell it once. So how many day trades is this? Well, what does everything revolve around? It revolves around when you're entering into the trade. And because you entered into the trade once and then twice, this would be 2 day trades. I realize only sold it once, but the rule does not care about the exit, cares about where do you enter in, how many times you enter. In this case, you entered in twice, therefore 2 day trades. Now this one sucks pretty bad, so let's get into it though. Again, we have 2 entries. You are buying 250 shares, then you decide to enter again, so you buy 250 shares. When you go to sell, you sell 251. Now the thing here is, well, how many day trades is this? Well, it would only be 1 day trade if that number was 250. Because if that was 250, well, it'd be matched up to this one. That's 250 shares, and then everything's done. But because it's 251, the way the broker looks at it is, all right, so you want to sell 251. So it's got to hop up here and take from this. So there's 250 shares. All 250 of those pertain to entry order 1. But then you still have that 1 extra share out there. So in order to go get that share, it's got to dig into this order. So now it's digging into this order, and this order pertains to that entry. So therefore, this is still 2 day trades. Because the broker has got to go find, all right, this person wants to exit out 251 shares. There's only 250 shares right here, which is part of transaction 1. But it's got to go down, dip into that one, therefore still 2 day trades. So be aware of that. Think about, well, how many orders is my broker going to have to dip into? Again, if you just because you buy in twice doesn't mean that you're going to end up having 2 day trades. A way to avoid this is just having sold, if this was 250 shares, well then the broker would have only needed to get into this one. So in that case, that would only be 1 day trade because it did not need to dip into this transaction at all. But because you did, because of that 1 extra share, 2 day trades. Pay very, very close attention to this one. Very, very important. So let's just first go through the scenario. Hopefully now you're getting the point. All right, blue pertains to buying, which means when you're entering in. So you enter into this stock ABC 3 separate times. So your first order, so the order of them, this was your first one right up here. Then you did it again down here. So that was your second in the sequence. Your third in the sequence was down here. And then you go and you sell 400 shares. So how many day trades is that? Maybe you're thinking, well, perfect. This person was smart. They sold 400 here. They had 400. So you match these up. That is 1 day trade. No, this is actually 3 day trades. How can it be 3 day trades? You sold 400. It matches up perfectly. Well, the problem is the way brokers match it up is they go in the sequence. So in order to fulfill this, they don't start most recent. They start way back here. So they have to dip into this. Let me change up the colors right here. So they have to dip into transaction number 1 up here. So we'll start, remember, they want to fill 400 shares. So they come up here, well then that transaction 1 gives them 100 shares. So that's 1 day trade. Well then you still got 300 left. So then you got to come down here to transaction 2. Well, that's going to give them 200 more. But you still have 100 shares left. Now you're dipping into transaction number 3. Well, that gives you the final 100 shares. But because you've had to dip into not only this one, and that one, therefore, this whole thing is 3 day trades. So again, it's matched up with the most in the sequential order. So yeah, that's 400. But in order to get this 400, your broker is going to hop back into the first entry order of the day, which in this case was 100. And then they go in sequential order. So keep that in mind. If you have a bunch of entries and then you think, well, I'm matching up the orders perfectly, well, just be aware of how that all works out. Again, they start with the one earliest in the day and then work sequentially throughout the rest of the day in order to match up where they're going to fulfill the shares from. This final example, just something to be aware of because then it could potentially open you up to all these other scenarios that we just talked about. And that is a scenario where I want to buy 500 shares of ABC. So I want to enter into 500 shares of stock ABC. So let's just say that you want 500 shares. So that's what's sitting out there. You put in what we would call a limit order. And then all of a sudden your broker either sends you an email or you hear a ding, something, and you say, oh, okay, of these 500 orders, I just got 300 shares. Now in the world of trading, this would be called a partial fill. So you got a partial fill. And just for a little bit more sequence, let's say you want all these shares at $25. So I want 500 at $25. Okay, I just got 3, but obviously I still need another 200 shares left. Then all of a sudden you get another confirmation from your broker. Hey, you just got 100 more shares. So again, this would be another partial fill. But the question becomes, okay, you wanted 500, but now you're getting the shares in chunks. You're not getting them all in one get-go. You got 300 here, you got 100 here. How many day trades is this? What's setting yourself? This is still considered one entry because it's all part of the same order here. Same order being the key word here. Because if something changes, and let's just say the price starts to move and you really want in, I want ABC, and not only do I want ABC, I want all 500 shares. So if you then go and either cancel, some brokers might call it modify. So if you go to cancel or modify your order in order to get the final 100 shares, guess what you just did? You just created a whole new transaction. So this would be a whole new buy order right here, right? Because you're no longer saying I want it at 25. You've canceled and modified the order to say, I want in at, let's just say, well, now I'm willing to pay $25.15. Well, up here it was 25. Now it's 25.15. These are two different entries. You are now changing what you want in at. So by canceling, modifying, changing, like I said, all brokers may have different terminology. But the point being, if you manipulate this order, then you are setting yourself up for another potential multi-day trades in the same day. So just be aware of that. I mean, if you just let this order sit out here and maybe you only just get 400 shares, well, then it is what it is. That's partial orders, partial fills, I should say, are not going to screw any things up. The only time you start to change things is if you cancel and modify that order in order to get up to the main amount of shares or contracts, if you're trading options that you want. So, I'm not going to say to avoid canceling or modifying orders. Sometimes it very well may make sense for you to do that, but just be aware when you are canceling and modifying because you're only getting partial fills, you are opening things up to all these other different scenarios that we talked about. So keep that in mind too. One final thing to talk about, shorting, it applies to that also, but everything is just flipped around. So what we talked about, instead of buying first in order to enter into a trade, those would all just be sells. If you understand shorting, then that should make perfect sense to you. If you're brand new, then don't even worry about shorting right now. Just first master how to go long and how to buy into things. So, but if you are a little bit more advanced, shorting definitely applies. Everything, like I said, is just flipped around. And as you should already understand, instead of buying to enter into a trade, you are just selling to enter into a trade. A final few things here to wrap up. First, if you're thinking, oh man, this stuff is just, what's going on? I do have a video of how you can avoid a lot of this stuff. It's not perfect, but it does give a lot more flexibility than what the day trader rules represents and kind of pigeonholes you into. So I'll put a link in the description box below if you're curious on that. Also, remember, just be aware of all the kind of tiny things that may be out there. For example, like I said, if you cancel or modify an order, that can change up the landscape of your situation. Remember the sequential order, that your broker is going to start up at the top, the first entry of the day, and then work from there. Again, something that can totally change the landscape. You may be thinking you're getting creative by selling a certain amount, but match that up with the order of which you entered into the trade for that particular day. If you found this video helpful, please click that like button. Comments are always appreciated. Shares are always appreciated. But the easiest way to say, hey Clay, thanks for doing this. Please keep making more. You're not wasting your time. Easiest way to tell me that is just to click that like button. So hopefully this can get quite a few likes, and hopefully this all made sense.